Okay, quick update. New York session. It is non-farm payrolls day. It's August 2nd. So we're looking at the dollar yen. Dollar yen. We can okay. So we'll go right back to the beginning. I guess we'll just take a look at the non-farm payrolls number again. The time that you see here reads 5 o'clock. That's California time. That's technically 8 o'clock. So between 8 o'clock and 9 o'clock, that's when non-farm payrolls is delivered at 8:30. So this is the non-farm payrolls candle, 1 hour time frame. So I'm going to go ahead and open this up. And right now at this moment, what I'm tracking is more yen strength. Obviously, we talked about this yesterday. You can't, in many cases, after FOMC, I mean, it's not something that you normally expect to see price reverse all the way back down like that. So it takes a lot more confirmation. And tweets on more tariffs and the results or the expected impact as everybody keeps analyzing this, and it's a lot of work. It's a lot of work to try to determine and to estimate the impact and the depth. So as you're sort of doing your analysis, you see more of an argument or a reason why the yen would continue to strengthen and take out these lows and then continue a lot lower. So it wasn't anything initially that I could trade back up here, but at this point where it's settling or after this relatively large, I mean, we haven't seen a move like this in quite some time, so I'll go to the larger time frames. Here's the daily, and right now at this point, the candle has not, the daily chart, the candle has not closed below that support. Originally, earlier in the week, I was looking at this possible head and shoulders pattern here. Inverted IMP crown pattern. There's my neckline. It only spiked up through it after FOMC, but did not give me a entry to go long with that continuation breakout trade, which is on the 1 hour chart. So it prevented me, the 3 pip entry rule prevented me from going long. And then it rolled right back over again. So yesterday, yeah, it was likely we were going to see some more follow through once that candle closed on the daily chart. But again, you've got to deal with the possibilities of how non-farm payrolls is going to play out, and if there's likely to be some kind of a bounce. So anyway, regardless, once we get non-farm payrolls and it's out of the way, sometimes non-farm payrolls will give me an opportunity to trade a breakout, a continuation breakout trade. Sometimes it'll look really obvious. I'll go to the pound dollar and you can see the consolidation range. But here, there really isn't a consolidation range that holds just yet. It keeps moving around. It makes a new low, bounces around, makes a new low again, bounces around, and then makes a new low, and then makes another new low over the last 3 hours here or 2 hours. So you can see what I mean. It's still making new relative lows here in price and lower highs. So we're still in a downtrend. Excluding that one spike here that kind of took out that little level, but it didn't close above it. So regardless, I don't have a continuation breakout trade that makes sense at this point. And the reason is that I don't know how this daily candle, what it's going to look like. It may close above and hold above that resistance point, which is here on the daily chart. That was back on June 25th. It might hold, and then it might bounce next week and move around a little bit. Anything is possible at this point. So I've got to wait, number one. And number two, the other reason, or the other thing that I'm waiting for right now, is that I can see more yen strength, which is dollar yen weakness here. I see a bearish engulfing candle. Normally I would want to sell it, but it's Friday after non-farm payrolls, and non-farm payrolls just created a spike down and up and down. The trend looks likely to continue to the downside. I'll show you my Japanese yen futures chart here in just a moment. We'll take a look at that. But again, the only thing that's stopping me from trying to execute a trade at this point in time, and this again is a 7 o'clock candle, so 7 o'clock, 10 o'clock candle. It's 10. This is going to close at 11 o'clock, this candle, New York time. I still have about another 36 minutes here until this candle closes. So it's almost 7:30 here, California time. Market closes at 1 o'clock, approximately, California time, on a Friday like that. So I'm going to be careful. What I don't want to do is get stuck into a position because I see these bearish candles, which would be okay. It would be the right thing to do because it's in the direction of the trend. But it's at a major support level. And then, again, going back to the idea of considering Friday, how I can see signals and a little bit of movement, and it might dip down a little bit lower and take out the low at 60 there, but maybe never even go to 50, maybe not even go any more than 15 pips, and then turn around and go right back up again and then go sideways into the close, and I'd get stuck holding a trade over the weekend. And if the market was going to react like this due to tweets, I mean, now you take into consideration that today Twitter can be an important and useful tool if you know how and who to follow. Again, if there's tweets over the weekend and Trump starts making more comments, I don't want to be on the wrong side of that. In other words, I don't want to short it, but then end up watching the market close on the daily time frame above support, and then some kind of a tweet that ends up reversing and pushing price right back up the opposite direction and maybe even a gap higher. So that's all that I'm trying to avoid right now. But at this moment, I still see Japanese yen strength. This is the daily time frame. Japanese yen futures. And again, remember, when we see price moving up on this chart, it's Japanese yen strength, which would mean the dollar yen would be dropping. So again, here's my range of consolidation on the daily time frame, Japanese yen futures, and I do the same thing, looking for the same setups. I'll just go ahead and borrow this one here. Sorry about that. And there's my resistance point. We've got a high. This was back on the 25th of June, just like it was when I showed you the other chart on the daily time frame for the dollar yen, just in the opposite direction. So I've got a high, I've got a low. Everything so far is closing inside and staying inside of that range as far as the candle bodies. Now I noticed yesterday, right, with FOMC and the reaction afterwards, the move here, obviously it comes together with everything that I see on the dollar yen, but again, it's still, I've got to pay attention to support, the initial support low. There's no candles that close below that low. And then you see the reversal, the strong reversal, which was yesterday with a lot of volume. Volume is going to be the first indicator that I look at, but nevertheless, it still has not closed above that resistance point. And until it closes above that resistance point and prints a continuation breakout trade for further gains on the yen with volume and all of the other indicators that I use, I'm thinking that it's just going to continue to remain range bound and maybe, reach resistance and pull away. So at this point, that's what I'm looking at. This is in real time. Japanese yen futures. So I'm going to go back to to this chart. I think that it's likely to see a little more movement to the downside, but I don't think it's going to be more than 10, 15, 17 pips, something to that effect, from where price is now. And again, if that's all, I mean, if I'm going to get in here on the closed candle, which is a bearish candle, and that close was 75, I would target either the 50 or the 20. That would be the only thing. But the only reason why I didn't jump into this trade is I wanted to see one more retracement and then a move back down to confirm that it's going to hold and then some momentum behind it. But considering that it's Friday, and if that happens in the next couple of hours, we're getting closer and closer to the end of the trading week, and fewer people are going to be participating at that time. So there's going to be less volume, less participation, and more likely to just not really go anywhere. So again, if I can see that it's likely to not really go anywhere or too far, and it's not even going to reach my expected targets, then I'll just wait till Monday. Monday, when everybody comes back to work, we're going to get a lot more movement and a lot more volume. Not immediately on the open, but you get my point. There's just going to be more price action and more movement and more overall participation, which means that it's likely to hit my expected targets based on certain behaviors, whether it's a reaction to economic data or political or even Trump making a tweet. A quick update, though, on the tweet. We've been talking about this. So the coaching, the beta program that was posted in the Facebook group, we've already started that for the people who have already joined. It officially starts August 26th, but those who are getting their seats now, we're already doing coaching and training. So they're getting like 3 extra weeks in their with their package, their beta program. So the question today, we had a lengthy conversation about how much should you really be, or should you really even consider using Twitter? Because everybody keeps talking about there was a tweet here and then we see this drop, and we were all watching it anyway. But is it something that you can rely on and something that you should actually trade off of? And I got into this conversation about how 2014 there was some activity in the Gulf, and there was some U.S. warships in the Straits. There was some approach. I remember there was one aircraft carrier. I think it was the Eisenhower, and a few others. But there was one particular incident with the Eisenhower. It was in the Gulf area, and it was approached by a bunch of little, I forget what they call them, smaller boats that have a certain size machine gun cannon attached to it, and it was surrounding the Eisenhower to a certain degree. I don't know if it was like maybe 15 or 20, but it was so on that particular day, as this is happening, and people are getting access to this information, they were posting these tweets on Twitter, and it was almost in real time as we were trading oil futures and commodity futures that were reacting to the oil markets. It was almost confirmation. It was almost as we were seeing these posts and these tweets that the market would actually move because the rest of the market was relying on the information that they were getting from people that were posting on Twitter, because there really wasn't any news source that was able to cover it. It was just individuals with their cameras. And then there was another incident. I forget the town, and you had a lot of the military action going right through the middle of town in some of those areas in the Middle East, and it was specifically 3 different zones I remember at one particular time, and there was, I'll never forget it. So there was a short video clip from someone's cell phone, and you see it was in the middle of the day, and it was it almost looked like a regular downtown area, business center, Starbucks on the corner, and coffee shops and things like that, and office buildings, and it looked like people were either out around lunchtime or they were just out in the day in this like public center, and some tanks start rolling into town right through the middle of this road, and everybody ducks behind these. There were like big cement seating areas, and everybody's ducking behind anything that they could because they didn't know what was going to happen. They just see tanks rolling through town, and it was caught everybody off guard. And a lot of individuals were holding their phones up over their, so they didn't have to peek their head up and aim the camera, but they were just holding their hands up to catch the action. And we saw the tanks rolling right through town with, military. I mean, there was like 4, 5, 6 tanks going right through, and it scared everybody that was there. And again, more expected positioning due to the tension that was building in the Middle East, which was again affecting oil, and then also having an impact on these commodity currencies. So as we saw that one posted, we were able to trade immediately as soon as that video clip hit Twitter. There was a reaction. So, and we were able to trade it. It was more confirmation. I could see it technically, but as I was calling out these trades with coaching students, we were able to comfortably, safely trade it. There wasn't anything that was like one of those scenarios where you get a comment or a statement or a rumor and it makes it move in one direction, and then sharply 30 minutes later it goes the complete opposite direction and everybody gets caught off guard. It wasn't even like that. It was very consistent as far as more confirmation of the tension and why, until it was clear that it was settled at that point, then you would expect maybe some kind of a turnaround or a bottom, but or a top, depending on what you're trading. So it was very, very reliable. Twitter can be a very useful tool, and I recommend you use it, but you've got to use it in the right way. You've got to follow the right people, and you've got to remember that there's a lot of chatter. There's a lot of sometimes when people post, they are posting an idea or a trade recommendation, but they don't come straight out with it. It's not like you're communicating in words where I was to say something like, I'm buying or selling dollar yen here at this level. It would be a real generalized, and they would play with and they still do it. They still play around with the way they post their trade recommendations. So it doesn't look like they're really calling a trade. But then if it works out, they say, I recommended. And, people will play games with their text because it's not clearly defined what they're trying to say in many cases. There's a lot of room for misinterpretation. And when things work, they go back and say, well, you can see that I called it here. And you look at it a different way and you go, okay, well, yeah, I guess you did. But then they're protecting themselves at other times. So you have to be careful with those posts. Have to be really, really careful. So we're watching the dollar yen. Again, I'm just trying to protect myself at this point. Don't want to get stuck into a trade. I don't know how far this is going to go. I mentioned that my target would have been normally 50. It might reach 50, but I'm not in this trade. Again, the way price was moving just about 15 minutes ago, I decided I would rather just stay away from it. Again, taking a look at the Japanese yen futures as it's approaching resistance, but not necessarily closing above that area, and it might hold at this level. I want to stay away from it. I don't know how far it's going to go. It would be great if we were in the trade to see it continue to just blow right through and disregard the fact that the market's going to close in a few hours. But I don't. I don't disregard those possibilities because I've taken trades like this where they look solid, everything looks great at 7 or 8 o'clock California time, and it moves down a little bit or moves up a little bit and then continues to go sideways and I get stuck holding onto the trade. The last thing I want to do is get stuck in this. This is the market environment where we could likely see maybe a comment about Brexit that create a big gap, or Trump and tariffs and talk, whatever the case is, that would, and you'll notice, and I've said this so many times, you'll notice that very often there are comments, statements, and press releases that are set up after the market closes, after the New York stock market closes on Friday. And so it doesn't give the market really an opportunity to trade it. Sometimes they wait until Sunday. Sometimes they'll do it immediately after the market closes on Friday. Take that into consideration. That means something. That's sometimes a trade opportunity. Last Friday, right after the market closed, Trump started talking about the dollar and a few other things. And he starts talking about his relationship with Boris Johnson, little things like that. So you wait, and the market waits for these opportunities, and then he starts tweeting. So watch those two things sort of connected. You get the opportunity, leave a television monitor on with Bloomberg or CNBC and watch, CNBC. I get CNBC World, so it continues around, and it's worth having your trading environment set up like that so that you're just aware of certain situations. Like if you know Trump is saying something on the news, on the television stations, watch it. Watch the commentary below it. They'll sort of give these snippets of information of part of what he's saying in some of these sentences, and then also watch his Twitter. Just follow it, even if you like him or not. He still moves the market. So I would recommend. We're here to make money. It doesn't really matter whether we like these people or not. It is what it is. We're here to make money. So be careful. But again, this is the reason why I'm being very, very cautious right here. I do not want to hold on to this position. There was a big move that occurred this week. He knew what he said was going to move the markets. They most of the time know they're going to move the markets. So be very careful. But so the two things I want to cover here are the setups for today and what I'm looking at and why I'm either trading or not trading. My decision not to trade is also a trade decision. And then the reason behind it. And also just the simple fact that sometimes you can use Twitter if you do it carefully, and it's a useful tool, and other times you can't. So the other possible setup, looking at the larger time frames as well, bullish, strong 4-hour candles. Nothing really went any higher than that. We traded the euro dollar here on a Tech 1 trade back up, and then it continued a little bit further and giving us another opportunity. But right now at this point with non-farm payrolls not really moving price in any direction, I don't want to go long. I think it's going to move up a little bit and stall. I don't want to sell it because I think it's the opposite direction here. But for the time being, I think it might just move around sideways into the close. It might spike up and take out that high up here, that 4-hour candle. This is the 1-hour chart, but it was also a 4-hour candle, a high at 14. It might take out that high by a little bit, but for 7, 8, 9, 10 pips and to hold on to the trade for 3 or 4 hours and not know if it's even going to go to any expected targets, it's much safer to be out of the market when the market's closed in this environment. There's no reason to leave capital in the market. If we're day trading, I'm talking about day trading. That means that we're getting in and getting out, hoping to close the positions within the same day, maybe the same trading session. Sometimes it'll take a little bit longer, but our expectations are not that we're going to get into a trade here on the 30-minute or 1 hour and necessarily hold on to the trade for 2 or 3 weeks. That's not what we're doing here. So again, I don't think that for day trading it's a good idea to have capital in the markets or any open positions when the market closes. We're going to get plenty of opportunities. As I mentioned, yesterday was a great opportunity. Only got one trade, but I had an issue with the pound dollar. Pound dollar. So I said I was going to look at the pound dollar just to give you some perspective on the continuation breakout trades and the consolidation. It's not necessarily lining up on the euro dollar or the dollar yen, but it's very clean and very obvious here on the pound dollar. And that'll happen sometimes. Sometimes you'll be focusing on a few other currencies, and then there's one that is very, very structured. And when I mean structured, I'm talking about the way I trade it. When I use that continuation breakout trade, it's structured the way I trade it. Now, this isn't necessarily the range that is going to create a continuation breakout trade, the range that you see here. This could very well change. It could test the support low and move price a little bit lower. It could move price up and not confirm, which means I might need to make some adjustments, and maybe that would be my resistance area. That's also a possibility. I won't know until it tests one of these two levels. So I've got a level in here, and if I traded a move up, which was what we were trying to do yesterday with the Tech 1 trades, that worked, but that's over, right? It reached its target. At that point, I'm done. So now it's just a matter of waiting for the next breakout and then confirming with the breakout. And it doesn't look like if it was to break to the upside, it would necessarily confirm. I might need to wait a little while longer, and then it'll sort of move into this upper range of consolidation. And then maybe Monday, Tuesday, Wednesday, break above and then start moving up. If that's in fact what we see. I'm not calling that, but if that's a possibility. So then maybe it could be the start of a new uptrend for August or August through September, whatever the case. And then we'll see more information. We'll have more information. We'll have more economic data. We'll see what's going on with Brexit a little more. And it'll become clearer every day that goes by for the most part. So that's how I'm expecting to trade this. But right now, I'm not going to go long. I mean, there's no point. The close of that candle's 27. It goes as high as 43. I mean, maybe there's a few scalping opportunities, but you know I don't trade that way. I trade to specific targets, or I don't trade it at all. And then I'm not going to sell it here at this level either, even when this candle closes. We got about 20 minutes left in this candle, so I wouldn't expect to sell it either. And I don't think that there's going to be any major move that would surprise the market between now and the market close. It's possible, but I don't think so. So I think right now the best option for me is to keep the powder dry, as they say, and stay out of the way and just wait for another opportunity. We're going back to the euro dollar. Not a whole lot of movement. Again, I could see that price would spike up a little bit higher, but I don't necessarily think it's going to be a really good, solid, valid trade where it would continue to an expected take profit level. And it wouldn't surprise me to see here on the dollar yen 1 hour time frame for it to move down a little bit lower and then end up printing some kind of a bullish engulfing candle before the market closes anyway. It wouldn't surprise me to see that. I'm not saying that that's what's going to happen, but it wouldn't surprise me. So I'm flat at this point, not trading anything at this moment. And so we'll look at where price is relative to the daily time frame and the close after the market closes, and we'll update. I'll show you all my price levels on the weekend update video.